Yo, welcome to another episode of Simply Bitcoin IRL. Today we have a very special guest, who I've known for quite a bit, and man, has he reached some heights. So very happy to have Dylan LeClair on the show. Before I bring him up, I want to give a quick shout out to the Bitcoin companies that make this show possible. If you haven't already done so, check out swanbitcoin.com. Best place to stack sats, built by Bitcoiners for Bitcoiners. And of course, Bitcoin 2023 is going to be the biggest Bitcoin conference in the world, Miami Beach, Florida. You could take advantage of the promo code SIMPLY to get a 10% discount on your tickets. Anyways, I want to bring Dylan on stage. Dylan, very happy to have you on today. How you doing, bro?
Nico, I'm doing great, man. Excited to catch up. We did meet, what was it, August 2020 at BitBlock Boom. So it's been a wild ride since, and happy to catch up.
Yeah, man, it's definitely been a wild ride, to say the least. I'm gonna rip the Band-Aid right from the beginning, and this is a question that I was very lucky to have Lynn, Jeff Booth, Dr. Jeff Ross on the show the last couple of months, and we all kind of go down this like Bitcoin rabbit hole journey, Dylan, and there's no end to this rabbit hole, and you just come to these realizations every so often. You're like, holy crap, like this is crazy. And where I'm at in this current rabbit hole experience is the scam of inflation. The idea that governments have somehow convinced the population that money has to steal from you in order to work. So the question that I have for you, Dylan LeClair, is inflation necessary for an economy to work?
No, I don't think so. It's just that we've witnessed the greatest technological boom in human existence and human history during a mostly Keynesian economic paradigm. Because of banker interest, because of human incentives, because of the limitations of gold to scale as a media of exchange. But in theory, and I believe in practice at an individual level, and eventually somewhat of an aggregate level on a global scale, we're going to see the reality where if you are willingly or voluntarily operating on a separate system, you can opt out of the kind of political pillaging that the monetary system kind of forces upon you. So there's still, I mean, we're 50 years into this period where the government said, all right, we're not even going to pretend that we care about this gold peg or tether anymore, and we're just going to be paper currencies. And we're about a few years, I think about 3 years into the period where the inflation is unchecked, or not unchecked, but it was checked down, it was held down, and that was propped up by the industrialization of the world and globalization. And now we've kind of reached our growth limits. Not to sound like what is it, Malthusian, but we're at a point now where the debt and the financialization probably reached a peak in purchasing power terms in 2021. And the war and a bunch of these other things kind of sparked a somewhat of a deflation into those things, of that paper wealth, and into the commodities and hard money sector. But I think the story of the next decade, the story of our lifetimes, is going to be the perpetual debasement of your purchasing power, and in any currency terms, with the dollar probably being the best until potentially trust is lost in the dollar. So a long answer there, but I don't think it's ultimately necessary. It's just that most everybody on the planet hasn't ever operated under a framework where it wasn't the baseline.
Yeah. So you said something really interesting there, and I want to focus on, because usually, I'll put it this way, Dylan, we're definitely in the somewhat younger generation of Bitcoiners, right? You're a bit younger than me, and I'm pretty young in the grand scheme of things as well. And the reason I'm bringing that up is because the statement that you just made holds a lot more weight for us, because we don't have an alternative. Like Bitcoin for us is the way out. If you're a little bit older, I don't want to say it doesn't matter, but I guess you could make the argument it doesn't affect you as much. So I guess my question to you, Dylan, is where does Bitcoin play? Like, what's Bitcoin's role for our generation? I'm on the younger side of the millennial generation. You're Gen Z. So where does Bitcoin play into this?
Yeah, I mean, it plays a big role, and I think in terms of wealth, right? Like Gen Z is irrelevant. Millennials are, as irrelevant as any generation in history in terms of like wealth purchasing power now. That transfer is happening, mostly through inheritance from boomers, or going to be from boomers to the millennial generation, and some to Gen X as well. But I think it's more of an ability to not be stuck in the old world, right? Like I approach Bitcoin at the same time as I'm approaching Keynesian economic theory, and like it was just obvious from like a fundamental level, like what was not more fair or equitable, but what I would prefer, right? Like what I want to do with my purchasing power. That was a very obvious choice over the long term. But if you've been grounded in some framework or line of thinking, whether it's at a business level or a social level, or even a political level, right? Like there, it's just ingrained into people's heads, and anything that operates outside of that box doesn't make sense, is illogical, is a scam, is a fraud, whatever the things they say about Bitcoin. But here it is. It's still hasn't died. Blocks are coming in, hash rates at all time highs. Right, like the market's saying something.
Absolutely. Do you worry a bit? Do you worry about? And the reason I'm saying this is what I've tended to notice, the pattern that I've tended to notice, and I kind of want to loop back into this concept of our generations. And the reason I'm bringing that up is, you mentioned it earlier, Dylan. If you're under the age of 35, you don't own anything. So does it worry you a bit that what I've tended to notice is that specifically the younger you are, the complete lack of interest in something like Bitcoin. People seem to continue to seek political solutions, and what I've also tended to notice also is that they blame capitalism for a lot of the woes of central planning, really of
Yeah.
fiat money. So, what are your thoughts on that?
No, I think that's dead on. It's dead accurate. There is a certain political nihilism to my generation. I've seen it with yours as well. Kind of a left leaning, or at the very least, a polarization. But at the at my age, Gen Z, like there is a very much ideological cult of social pressure to like conform to this certain fundamental reality that just somehow came out of nowhere, right? Which is 2 plus 2 equals 5. And we can blame all these things on capitalism when capitalism is the greatest wealth and wealth producer, but not wealth producer like or wealth creation, but standard of living increase, like because of the capitalist innovations and ingenuity. So that's it's illogical, right? But I think ultimately, economic reality and Darwinism, as harsh as that sounds, is always going to impose itself. And things like these political ideas work in theory and not in practice, right? America has open capital markets. We're the global reserve currency, and when with that reality, without being able to close your capital account like China would, uh, money's going to flow to where it's treated best. So any of these MMT, fantasy land things, CBO budget just came out today, said 2032 comes and debt to GDP's right where it's at, right? We're just and to fund all this entitlements, to fund all of this spending over the next decade, the green revolution, whatever it may be, right? Maybe cancel some student debt, etc. It's all going to be basically monetized via the Fed or another government entity's balance sheet. There are no structural buyers of the debt, and so your purchasing power erodes away with as fast as the spigot does, or the money printer. So I think that's the bull case for Bitcoin, is just like it's just math. And when you say that, it sounds like super bold to someone that hasn't done the homework or kind of worked through the game theory. But like, what's the ultimate reality of this debt situation that we're in an experiment of, right? We're 50 years in. So where do we go? And I think my answer is obviously it's debasement. So where do you want to put your money?
Yeah, they have no option but to print. I completely agree with you. But Dylan, you said something very interesting, right? Which is political ideas. These political ideas, they work in theory, but in reality, it's a different story. But I think history has shown that you can surely impose those political ideas on a populace for a significant amount of time. And of course, reality snaps back, but it's crazy how long they can hold on, right? And specifically, let the example, just to mention one, not to dive deep into that, but Soviet Union, right?
Yeah.
How many? It's like I think it was like 70, 80 years, right? So I guess the reason that I'm saying this, I'm bringing this up, is our generations, the millennial and Gen Z generation, I think loves entitlements, man. They love that idea of entitlements. I think the idea of entitlements is only possible with fiat money, with that money printer, with deficit spending. Don't you think that a lot of hostility is going to be going to be at least pointed at the thing that a lot of people are going to perceive as responsible for those entitlements being taken away from them? And I guess I would reference really the predictions in the book, The Sovereign Individual, where he said just that, right? A lot of people living in this old system, in this giant, welfare, giant monstrosity of a welfare state. And all of a sudden, those entitlements that you fundamentally believe that that you deserve are just ripped out of your own hands. And I guess Bitcoiners are in the crosshairs for that.
Yeah, yeah, for sure. I mean, that's not the cause, but that's the solution. But the political opposition to it, and really the psyops, right? From a narrative perspective, propaganda will be very intense. I think maybe this is a little nihilistic or a little sad, but it's more so like there's kind of a return in this shift, right? In this like big fourth turning kind of thesis, where like technological advancement has brought us this far, and now the monetary system has brought us this far, and there's kind of this line in the sand, but it's not line in the sand. It's not like one event horizon, but really, if you think of like what the 2020s have already brought us and where they're going, right? What are the World Economic Forum's great plans for us, and to create a human race of basically cattle in this technological panopticon dystopia. And it'll be more of an individual level about whether you want to opt out of that system of global control and compliance. And one of the keys there on that checklist is sovereign monetary or sovereign economic autonomy. So if you don't have that, then you have nothing. You can't, if you can go anywhere in the world with your money in your head, in theory, that's pretty powerful in a world that's increasingly polarizing and bifurcating. And who knows where you are or what your political situation is there. And so it's all a relative game. And I think having that flexibility and freedom for someone that's young, for someone in their 20s, never mind that, regardless of your age, if you want that economic sovereignty in the digital age, there's probably not really many other places to look for that list of economic empowerment. Nothing else is as important as money, ultimately, as a tool, in my opinion. I guess food, shelter, the basics, but yeah. So Bitcoin is right in the middle of this whole thing, but it'll be at an individual level. Maybe you could say a corporate level. Some will survive, but not everyone is going to quote unquote make it, and that's somewhat of like a harsh reality of this transition. The goal is to get as many people, if we're right here, like everybody, we want Bitcoin in everyone's hands, but it's up to the individual to do that. That's not on us, on you.
Yeah, 100%. So Dylan, it's been the last couple of months if you've been paying attention, but how do I put this? I guess I'll put it bluntly, the hostility by the Biden administration towards the industry. I think they were waiting for an excuse. They're waiting for an excuse to, and with that excuse, they denied Caitlin Long's bank, Custodia Bank, from getting a federal banking charter. And then as of right now, their next target is stable coins. Right. We know that they made an example of Kraken, $30 million fine with the staking. Maybe it's because we're slaves to the news cycles at Simply Bitcoin. We have to cover the news every single day. But it definitely does look targeted, sophisticated. And there's this very excellent piece that laid it out by Nick Carter called Operation Choke Point 2.0. And he really laid it out. He really made the case with all the examples, not to mention the Senator Elizabeth Warren and Senator Marshall bill that would require Bitcoin developers in the United States to register with the federal government to develop for, like, absolutely bonkers that you could see this in America. But clearly there's an agenda there. So what are your thoughts on all of this? And I think it could tie in with what you were saying not too long ago.
Yeah, I mean, I think definitely that choke point comparison is valid. I think also we should be realistic and recognize, simply Bitcoin has definitely been one of the media arms covering this that has recognized it. But there's a whole boatload of fraud and all sort of shenanigans with crypto companies and the Ponzi's and everything else that touched hands with the U.S. banking system. That touched hands with Silvergate Signature, FTX, these stable. It was a hot pile of money, billions of dollars of leverage, between counterparties and everything else, and there was a lot of fraud kind of in that whole basket or bubble, right? So the response is one that I would fully expect from the U.S. banking system, and that's to ramp it up to the point where only the sterling companies or like just for instance, right, the Binance BUSD coin from Paxos, right? Binance was doing some shenanigans with a peg of that Ethereum based stablecoin and creating their own Binance Smart Chain based stablecoin, but they didn't back it up all the time, and they were counting it the same on their platform. So the New York Financial Service, I forget the exact name, NYDFS, came in, said, Paxos, nope, you're done. You can only redeem now. You can no longer create stablecoins. And you guys got a year to basically get out of that. So yeah, it's coming. I think it's not the end of the world. It's certainly U.S. capital markets are the most important, but Bitcoin's just going to route around it. It's going to do its thing. It's a global phenomenon, and I think it'll make another all-time high at some point. And I really don't care what that timeline is to get there. I honestly expect some chop for a little bit while we kind of chop through this macro situation, but the U.S. has an open capital market system, right? So they can't stop all capital from coming to this thing. It's essentially just a global currency pair. So there will be liquidity, and that will probably be eventually they're going to attempt to consolidate that between the incumbents, right? BNY Mellon and JP Morgan or maybe not JP Morgan, but the incumbents, right, in the legacy system serving as those rails, and not as and not for Coinbase or whoever else is really doing a lot of volume with the legacy system. I think that's what they're really trying to get a hold of.
So yeah, interesting. So you don't think it's necessarily an attempt to slow down the adoption of Bitcoin. You think it's a legitimate government response at the fallout from the FTX debacle.
Yeah, I mean, and not to give the government any said legitimacy, I think there's quite a lot of reasons to point that they are completely illegitimate. But a side point, like, that's the system we're operating under, and you can't just go create your own bank, right? Like there is a cartel of sorts, a regulatory cartel globally, with the U.S. kind of operating as that head point. So they're going to try to starve the beast a bit, but you can't, right? Bitcoin's a 10 million, 100 million headed Hydra at this point. And so, the cat's out of the bag. It's just a matter of, that it's been in the they fight you stage for a little bit. Bitcoin just keeps going back stronger and stronger, and they're like, oh shit, but they can't kill it. So I'm really not all that worried, to be honest. Maybe that's a little bit naive though.
No, me and Opti joke about this all the time. We say we're just going to have to move to El Salvador. Would you be willing to move to El Salvador, Dylan LeClair, if things really did get hairy?
I would probably be willing to move anywhere, depending on how you define bad, but gonna probably stay in the West for a little bit. And then maybe, who knows, I'll settle down in a few different places, of which El Salvador, maybe is one. I have this infatuation somewhat with kind of playing out the sovereign individual digital nomad thesis for a little bit over the coming years. I mean, that's the plan for my next year, essentially. And so we'll see where it goes. But El Salvador is definitely, it's looking good.
Yeah, I tried it for a bit. It's fun, but it does kind of feel like your home is a bag. So I guess that's cool. Definitely cheap though. That's the good. That's I guess the pros for it. Anyways, Dylan, don't you think that this, potentially is forcing Bitcoin businesses overseas? And I think that was one of the main talking points that I've heard against this onslaught of regulation.
Yeah, I mean, potentially, right? Like it's certainly making it a lot more challenging for the legitimate actors here, and it slows things down. That I don't think it's an argument there, but like there's a reason for the scrutiny, right? It's like the largest players in this industry were all in some ways fraudulent, lied. There was a huge daisy chain, and now like even not to go down this rabbit hole to this time, but like there's legitimately massive question marks regarding the world's biggest Bitcoin crypto player right now, which is Binance. And right, and they're like basically not allowed to operate in the US. They're kind of shadow operating in the US with Binance US, but like they and essentially right, they're like 50-60% of all crypto trading volume right now, and kind of liquidity, right? So and that's just it's a massive black box. So I'm not like throwing shade at Binance. It's just the reality that like it's way more nascent than I uh, would have thought even in 2023, which is super great because that means it's cheap and it still has massive potential and it's barely just a teenager. But we should recognize like it's barely just a teenager. A lot of people don't really understand this thing at all. And someone operates fraud via the Bitcoin or whatever crypto, right? And it's like someone in 1980 or 90 saying like the internet enables fraud and scamming. It's like, yeah, of course it does. It's just it's not the internet's fault. It's not the protocol's fault. So that's just an education process, and then we're both blessed with plenty of time to just kind of watch the cards fall.
Absolutely. Let's see where this roller coaster ride takes us. So you mentioned Binance. Now, I think Binance is very interesting because don't they have the BNB token? Aren't they just issuing their own money? Like, isn't that very similar to what FTX did? And then, not to mention, we don't know. Like, they've been, it's been very hard. Binance hasn't showed their books since they last raised money. I think the last time they raised money was like in 2019, right?
Yeah.
So how would we know?
We don't know, and they do have a token. They're not, in theory, they could change. I mean, they are operating the validators, right? Like they could change the monetary policy. In theory, in practice, they have 60 to 70 estimated percent of all tokens of this $50 billion asset that they definitely had an incentive to pump, and it's kind of wildly outperformed everything,
Mm-hmm.
even Bitcoin to the downside, which never happens. So there's questions, and I've rightfully brought them up, and people have said it's FUD or I'm delusional or whatever, and I'm just saying like, hey guys, like this thing's at a $50 billion market cap with it only trades on one place, and their assets and liabilities are a black book because they don't have to show you them, and they're saying, hey, here's a proof of assets report, and I'm like, assets don't matter at all. And it's really not enough to say like I trust your word for it. So I'm not saying like CZ has an agenda or is bad or whatever. I'm just saying like there's obviously periods where their proof of reserve wallets have changed. They've switched them up. They've commingled corporate funds and recovery funds and customer funds and admitted to it. They said here's $1 billion in BUSD for industry recovery, and we're like, hey, you sent that from the customer's wallets like a day ago, and their response essentially in a blog post was like, oh no, like our internal exchange security is so good that we use corporate funds for in the same wallet. That was the response, like the PR. They tweeted this out, and I raised that up, and people were like, "FUD, FUD, 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 FUD," and I'm like, guys, like, okay, it's FUD. So like, I don't have an agenda. Like, I'm just like saying, like, it's just you know, take control of what you own. If something bad happens, it's all entirely on yourself. Like you signed up for this, and you were trusting someone that doesn't. How are you going to enforce responsibility if something bad happens? Not your keys, not your coins applies to even Nico. Like you're my friend, I trust you, man. But like if you're like, hey, I'll hold this Bitcoin for you, don't worry, I got it. I'm like, maybe I trust you, but eventually, if I don't and you scam me, then I got scammed. Like it was my fault. And I think just there's been a lot of hard lessons, but like, not unfortunately, like I just hope there's not more hard lessons to come. And I think at some point there will be. I'm not saying it's with, the biggest elephant in the room or not. I'm just saying like we've seen this stuff repeat through the history of Bitcoin. There's this ongoing process, and I unfortunately, regretfully say that the next bull run we will see, 10x the shenanigans we saw this past bull market in terms of people losing funds, scams, phishing scams, KYC, all this crazy stuff. So maybe that's pessimistic as well, but I think we're gonna go through another cycle. It's gonna be 10x crazier. It's gonna be 10x the amount of fraud, and that's a blessing and a curse of this decentralized internet money monetizing from scratch. It's just very Darwinistic.
Yeah, I completely agree. I think the what was the first one? Mount Gox, right? And then it just progressively just got bigger and bigger. Last blow up, you literally have Tom Brady and Mr. Wonderful involved.
Yeah.
And they were spokesmen for the FTX organization. So yeah, and I agree. Maybe perhaps next time a nation state will be involved.
Yeah,
I
just
know
nation state Ponzi. Yeah.
like it sounds ludicrous, but if I told you what happened this past year with the FTX stuff, if I told you about the penthouse in the Bahamas and all that stuff, and I told you about that 5 years ago, you would have laughed me out of the room. So yeah, it's definitely Wild West for sure. So I want to focus on something that you were mentioning earlier, and I think that's a very interesting topic, and that's something that I've heard from people, and I would say it's more so of a disillusionment. And what I'm talking about, Dylan, is the fact that buying the BNB token has outperformed Bitcoin. Like even Ethereum, that wasn't the case. Ethereum still hasn't made an all-time high in Bitcoin, but if you're looking at the Binance token, it has outperformed Bitcoin, which is extremely rare, like you said. Is that due to manipulation? And of course, we're all speculating here. There's absolutely no way to know this because it's all behind the scenes. But what's your take on that? What's going on there, in your opinion?
My take on it is that there was an obvious incentive in 2021 with the Bitcoin broadly crypto, pump, where we saw $3 trillion of imaginary wealth creation of probably just in aggregate, let's say 100, maybe $200 billion of capital inflow. That's 200 billion could be really generous. Maybe 100 billion total, maybe less than that. Could be 50 billion in raw US cash coming in to this crypto ecosystem where it got levered up. With the DeFi stuff, it got levered up as Wall Street funds tried cash and carried GPTC, starting at 9K, 10K, buying up 100,000, 150,000 Bitcoin. Sailor punting his corporate, not punting, but just all in his corporate treasury, buys another 100,000 Bitcoin. Relatively supply inelastic, it soars. Bitcoin goes to the moon. And the theory of alt season, right, is this pair, this trading pair of altcoin BTC and whatever this altcoin is worth. And there's really a lot of these things are intrinsically, it doesn't even matter if they have value. Like the meme coins are literally just a nihilistic financial form of gambling that's less than zero sum because the exchange takes their fees. But given the supply and elasticity of these things and the volatility, it's so illiquid, right? The bid asks are crazy wide, so a little bit of money on either side just moons the thing, right? And so altcoin outperformance is a big narrative, but in particular, if you look at like the best performers during this kind of hype phase, it was like exchange tokens, right? You saw Celsius go bonkers, you saw FTT go bonkers at the same time. Binance trailed FTT's outperformance by a couple weeks. I might have that flipped. It might be Binance went first and FTX started going insane, but they all outperformed Bitcoin like crazy. And the smaller market caps for sure, way less capital inflow, but people only look at the percent returns. And they all of those things crashed. The correlation and illiquidity traded both ways. As volatile asset to the upside, more volatile than Bitcoin, to the downside as well. And BNB was like kind of this weird financial anomaly where it was, a 200, 300 vol asset in a bull market and in a bear market where Bitcoin is, after it's kind of all settled down, Bitcoin's let's call it I don't know, 80 vol asset. BNB is just around the same. It's a little higher, but not double, not triple, like it was in the bull market. And like those things make me scratch my head. I can't know anything there, but ask yourself what the incentive is to pump your thing that you own 70 billion of. And the thing that makes me fishy is like, a smart capital allocator, if they created money, created an asset from nothing, and within 5 years or 4 years, the thing was worth total market cap 100 billion, and you had 50 of that, and you can't unload that 50% into the market, but it would, in theory, make sense to like take some chips off the table if you were an unbiased capital allocator. And the fact that they're like, oh, we've never sold any, and we don't leverage against it. It's like, okay, then what is the point of holding it? There is no point. So if you're never going to sell it because you don't want that to impact the market to the downside, where there's no real natural buyers, right? You're the primary market maker. You're the primary liquidity. You're all the liquidity. Binance platform. You can't really sell any. So the thing that I would worry about, and the reason FTX went down, was because they were borrowed, collateralized against the solvency of the aggregate system. They were collateralized against their own exchange token. So I couldn't prove that Binance is doing that. Do I think that it's majority chance they are? I don't. I mean, I hope not. But certainly the outperformance is noteworthy, and not really noteworthy in a great way. It's noteworthy in like a very suspect way, in my opinion. So could I be wrong there? Of course. I'm not accusing them of anything, but I would encourage people to be more skeptical of the world in general. Right? These are not outrageous things to ask or post forward. It's not FUD. It's like basic due diligence. So yeah, that's my thoughts on that.
Interesting. Yeah, and I agree. It is kind of like this weird anomaly, right? It is strange, and then, right? What's that? It is a very famous saying, right? It's like, if you don't understand, like, just look at the incentives, and yeah, totally incentivized to manipulate it to his benefit. And I think you pointed out the lack of liquidity is interesting if you want to sell a lot. Anyways, before I get carried away, so Dylan, I think a lot of people last bull market were let down. I think a lot of people were anticipating 100K Bitcoin minimum. I come from the school of thought that it's interesting how the CCP banned Bitcoin mining right at the perfect time in the Bitcoin bull market, and that, shortly after we had a massive price crash, as long as with the hash rate. So were you one of those people, and I could say I was definitely on a personal level, were you one of those people that were expecting 100K Bitcoin the last bull market, and why didn't we hit that? Were people overly bullish? There's this theory also, diminishing returns, which kind of makes sense, right? It's a lot harder for Bitcoin to get from 50K to 100K than it was for it to get from $1 to $2, right?
Yeah.
So what are your thoughts on this? And a lot of people see it, Dylan. Is the opportunity, are people late to Bitcoin?
No, I don't think people are late. And to answer your question, I was at the time. I was pretty bullish on the price action. Kind of in the spring, obviously. I was had over 100% of my net worth in Bitcoin by the summer of 2020. Kind of acquiring really any leverage I could. Irresponsible, but as a 19-year-old kid, like transparently, I was doing that. Pumped like crazy, retraced with the China stuff, still, balls deep long. Got some call option exposure and a bunch of other mining plays in the summer of 2021, and rode those pretty high and didn't fully round trip. Like I have a HODL stack. I don't touch it. I'm constantly adding to it at DCA. Given my job as a market analyst and as someone looking at data and markets 8 hours a day, like I also have something like a portfolio, a book where I'll actively manage it a little bit more. So, I buy some equity sometimes. I short equities, bonds, options, all these other things. And I don't like to, given the size of my audience now that I kind of just stumbled into, I don't like to not transparently show my book, but I don't like to, post my book all the time. My book meaning whether I'm buying this or selling that. I'll occasionally, but I won't often just disclose it because I don't think, I don't want to influence my followers to do this or that, other than save for yourself the long term. I think it's a pretty reasonable position to kind of put forward. But no, I didn't. I didn't sell the top. I wish I would. I wish I did. In hindsight is always 2020. But since I think first quarter of 2021, 2022 rather. I'm sorry, when it was pretty clear that the kind of the credit system, the economic tide was turning a little bit. That the didn't make the flip perfect in 2021 of November, but once it was clear that okay, the bond markets has to sell off here because inflation's 600-700 basis points over our all durations of the yields. We're in for some pain and kind of liquidity suck, and I think we're still in that, right? Like I still think a recession is coming. The economy is surprisingly resilient in nominal terms, but I do think we're headed for somewhat of a kind of a debt, not unwind, but right, we just saw massive wealth destruction in 2022 from all-time bubble, everything bubble highs. And you just look at like what the wealth effect does to a real economy on a lag, and there's certainly some contraction coming, in my opinion. And so Bitcoin is going to do extremely well over the long term. But like the only reason I pay attention to any of this economic data and cycles and everything else, or I post the Fed funds rate futures, like why that stuff fascinates me is because we're always hyper focused on the numerator BTC, which is the important thing here. But from an exchange rate perspective, there's going to be times, and asymmetric times at that, where the USD component of all this is going to be the driving force. It's going to be the reason Bitcoin ticks up, ticks down, and we saw that in a lot of 2022, right? So I mean, today Bitcoin's up 8-10%. Equities are mildly green. That's pretty encouraging to see, and it shows somewhat of like a supply demand mismatch, at least locally. Maybe like sellers in aggregate are exhausted after getting absolutely pummeled over the last year. But Bitcoin as this global asset, right, as it's monetizing on everyone's balance sheet around the world, Bitcoiners should recognize, and I think even honestly be encouraged by the fact that Bitcoin is trading with global liquidity. As the dollar strengthens, and in aggregate, everybody's short dollars in this this current monetary system. And so as there's a short squeeze on the dollars, right, like just this is basic math, like denominator USD is increasing and the numerator BTC is just all else being equal, right? And Bitcoin exchange rate drops a little bit. Like I think that's natural, and I think that's a good thing, and it shows Bitcoin's maturing, and that there's going to be a lot more liquidity that can flood into this thing as a pure monetary asset. Right? People monetize bonds, people monetize equities, right? And as now bonds have sold off, and equities are more expensive relative to bonds than ever, right? So people still have this like monetary premium for equities as like a store of value. But now the S&P, right? Here's like the interesting thing is the S&P has like an earnings yield right now this year of 5%. But you can also get that risk-free as in, the government is going to pay you by printing press or by force via taxation. But that short-term stuff's paying 5% too. So stocks are now in this weird place where like they're down 20% from the highs, but they're more overvalued relatively than they've been in decades. So like this whole kind of unwind, I think has yet to play out in full. I think Bitcoin, if there is some massive risk off rally or risk off downturn, Bitcoin's not going to be insulated. I think that's natural. But could the bottom be in? Of course, 16K, 15K, like half the industry went bankrupt, right? Right? Like I didn't shove all my chips in the middle at 16K, and I'm totally fine with that. I got a bag, right? So I think everyone's like really focused on like, is the bottom in, like, and that's fair, right? Like I would have loved to have called it to the T. But I also think that, we should be prepared for anything. And if Bitcoin wicks to 10K because, the financial system blows up tomorrow, like that shouldn't change your position, right? So like just having that ability to tolerate volatility to the upside and downside is something that you should have if you have a long-term outlook.
Absolutely. And Dylan, one of the things that you mentioned, and I kind of wanted to double back on that, right? Which is, and you're mentioning, you said that there could be a potential contraction in 2023. And this is actually a similar question. I see Dr. Jeff Ross in the chat. I asked him this when he came on the pod a couple of weeks ago. And you know what, the way that I'm seeing it is, right, what the central bankers have been telling us over the last couple of months, right? Just it's going to be a soft landing. Everything's going to be okay. But so far, right, you had the employment numbers. They were pretty solid. They were pretty good. So, I mean, were they able to pull this off? Were they able to print this ungodly amount of money with absolutely no consequence? Or do you believe this is the calm before the storm? And the reason I'm saying that is because I saw a tweet that you posted 2 images, and it was fascinating. It was like, yeah, the U.S. economy is fine. Everything's going to be happening. You look at the dates; it's 2007. So of course, we're not fortune tellers. We can't read into the future. But what does your gut tell you, Dylan LeClair?
Yeah, my gut tells me, and I'm prepared for really any outcome, but my gut tells me that we got some ugliness to churn through. It's like the conversation has gone from hard landing to soft landing to like no landing, no recession, and I think, and I am not not held accountable, but put me in this camp as well as thinking the downturn as a result of this kind of re-ratchet higher of interest rates, and then the duration value of all these assets. Right, when money was free, when the cost of capital in real terms was negative, the value of everything else was in theory infinite. It just didn't compute. So we had this global everything bubble, interest rates. The market essentially forced the Fed to tighten short-term interest rates. Kind of went to the moon because of this inflation, right? And here we are, and I think this isn't max pain. I mean, for Bitcoin or crypto or your favorite social media app ticker, right? Like the bottom could in the wick, it could be very well in, but I think people should just look to similar analogies, whether it's 2000 2008, whether it's the 2000 tech boom, tech bust, whether it's the 70s inflation, right? And you should look at high interest rate cycles. You should look at S&P, and you should like look at how long these things potentially take to play out, as well as like the kind of the crazy relative rallies from the local bottoms that assets have, right? The S&P 500 didn't bottom for 24 to 30. I think it was 30 months after the top in tech stocks, and the S&P 500 went down 50%. Right, so it's the tech boom. It wasn't even known as a real bad recession, and the S&P 500 still fell 50%. Right, so like I think it's just whether it's Bitcoin or not. Like Bitcoin went down 80-75%. Right, like certainly painful, but I think mentally you should prepare for a good amount of chop. I think we got some real pain, essentially in the global economy to come, and the U.S. will be relatively the best in the best position. Our capital markets will be the best, potentially, and the dollar is going to be a relatively great place to be compared to all these other developed market and emerging market currencies. But the dollar will still be devaluing in real purchasing power terms, and monetary repression, financial repression, inflation above interest rates, even if it's 6% inflation and 5%. Or maybe they even get that CPI annual number down to 3-4% while their short-term rates are at 5.5. Maybe that happens for a little bit, but on a long enough time frame, they can't do that with debt to GDP at 120%. You can't. You have to get the real debt burdens down. The CBO just came out today, projecting debt to GDP 10 years from now to be at the same level, right? So they're not even really projecting any grounds made up. They're just gonna tack on another 10 trillion of debt, right? Just create more money injected in the bank system. And I think we're going to see that theory doesn't really work well. It's not going to be a flat linear line, right? Of productivity and debt, like they're kind of projecting on these models, and the reality of this debt overhang and global debt levels and old demographics is going to kind of lead to some really nasty unwinds. Like we've already seen the economic cycles kind of like we jacked the money full of the world economy full of funny money, and we didn't really even make it 18 months without that kind of real economic activity turning over, right? Like we still have a really hot economy in inflation terms, in nominal terms, but adjust that for inflation. We're not growing. This isn't growth, right? It's apathetic, lethargic. And we have an aging population of boomers that are about to, all go into retirement and sit back on their, on their yacht in their second home, while the millennials don't own anything, right? So like, there's a really interesting dynamic at play here. It's gonna take a while, but I think that I don't think a recession, a strong one, is in the cards for 2023. I think that's honestly a story that could go into 2024. And like hold Bitcoin, have some stuff that it doesn't matter what the next 18, 24 months of price action have. But like, I feel very comfortable having a whole large chunk of Bitcoin and a good chunk of dollars ready to buy Bitcoin or anything else. And these, like, I think it's not a kind of linear debasement. And at some points, you're gonna have periods where the dollars actually, increase in purchasing power in an asymmetric way relative to everything else, right? As a function of these deleveragings, as a function of a credit system kind of unwinding. So that's kind of why I have a little of both and try to, balance those two.
So I want to pull up this image because I think it's a good visual representation of the situation that you were explaining. And I think Lynn put it perfectly, right? The U.S. Treasury Department actually published this, and for audio listeners, right, it has historical and projected, and then it has a metric that says debt held by public, and dude, it's absolutely crazy, dude. So this is what you're talking about, right?
Yeah, I mean that's basically MMT visualized. That's not a free market. That is the nationalization of everything. In a sense, essentially the implementation of communism. I mean, because okay, if you think about what 700% debt to GDP is, right? Like that means that for a populace creates $10 trillion of productivity, and there's $70 trillion of debt to be paid off to the government itself, right? So what is it? It's like in indentured servitude by your own governmental body, right, for the collective. Like what is that? Financially, that's like literally the implementation of top down communism, and that sounds like super super dark and maybe a little bit hyperbolic, but like, right, I think my response to that chart is that the U.S. has open capital markets, at least for now, right? Unless there's some drastic change, and that the money's going to flow where it's treated best. Nico, you should pull up. If you think about Bitcoin versus the dollar ticker, or really anything, like everything is a relative pair. You should pull up a chart of the U.S. dollar relative to the Argentine peso. It's USD ARS, I believe. And look at the daily, weekly, monthly candles of this thing, and it's actually crazy to visualize. Just this unbelievable debasement. And I don't know if you can pull it up now or you have that prepared, but it is just quite a amazing chart to look at. I mean, you feel bad for there's no drawdowns, right? It's just a steady dose of devaluation every single day. It's systematic, it's political. And the reality is their data is actually much better than the actual situation, but to a less drastic extent. This is how I think of Bitcoin interacting with the dollar, right? It's obviously a lot more volatile. Bitcoin has this kind of wild card in the room that anybody can flood to, and oftentimes flood to at once, which leads to these crazy explosions. But it's all a relative game, right? So the dollar, they're literally telling you to your face they're going to continue to print this thing, and so I think natural economics, human incentives are going to play a big force, and people are going to go where your money's treated best. Just like, look at that, it's just up only, man. There's not even the daily chart looks the same. It's just like literally there's not even a red candle. It's insane.
It's absolutely wild. And then that reminds me of I'm glad that you brought up Argentina, right? The recent Bloomberg article, I remember reporting this not too long ago, like a couple of weeks ago, 95% inflation. Now it's up to 99% inflation. Yeah. That's absolutely wild. And what's really interesting also is that they went to the IMF. They wanted, a debt deal. And part of that debt deal, the IMF was like, hey, we'll give it to you, but you must de-incentivize the adoption of Bitcoin in the country. Dude, it's wild, man. So like, I don't know, Dylan, what do you think about the 99% inflation, the hostility from the IMF, which obviously makes perfect sense, but what are your thoughts on all that?
Yeah, I mean, I think again, this is kind of to circle back to what we said at the beginning. Like, this is an individual's game, and there's certainly a level of a financial literacy and technological literacy required to adopt Bitcoin in a self-sovereign way. But I can assure you that there are Bitcoin black markets, just like there are in Argentina. Not to encourage black market activity, but that official dollar peso exchange rate you just put on the screen, that's the official one. That's not the street price, which is actually much worse, right? Or much stronger for the peso, weaker for the dollar. That's the government rate, right? So inflation is actually much worse, right? So that that market phenomenon doesn't actually create that perfect chart. It's the government literally just giving you the inflation data or the pricing data that's cooked, right? The official exchange rate. And so I think that people are going to adopt Bitcoin in a self-sovereign way because I've talked to people that have done it in South America. I've talked to people that have actively fled regimes or secured their wealth in emerging markets and all over the world, right? So I think it's an education thing, obviously. It takes a while. Bitcoin's still very young, but it's for certain people, for families, for companies. Uh, you know, it's a having something that is a liability to no one is an extremely powerful thing. And honestly, like still, I'm pretty bullish on like the adoption of like for instance like Tether on Tron is extremely popular. Is Tether like the best thing for people to store all their family's value in? No. But these people want dollars. They want something that's stable to them on a day-to-day basis. I know the dollar purchasing power isn't stable, but on a week-to-week, day-to-day basis, for these people, it's extremely stable. And so they, that adoption I think is a bridge. But ultimately, talking about the rugs and the collapses earlier, I'm not saying Tether is bad or not. I'm just saying like there's a liability there, right? They're issuing you this trusted, token, and they can freeze it, they can steal it, they can, take the money and run, right? There's a liability baked in there, and all stablecoins have that model for now. Decentralized solutions are attempted to be built, but we're not there yet. Sats on the Lightning Network, dollars on the Lightning Network, these, Terra protocol. It's really interesting stuff. We don't really have the implementation of it yet, but I think ultimately Bitcoin on chain, but really mostly Lightning adoption to quickly onboard users is the kill, not one of the killer apps for Bitcoin, and we've just scratched the surface there. We're really in year maybe 1.5 of Lightning being good enough to kind of actually operate on a meaningful scale, and some would even say we're not even at that point yet. So that's going to go exponential, and it's not even going to be exactly expressed directly into the exchange rate at first, right? In the same way that the Grayscale ARB and Michael Saylor 5x the Bitcoin price, with some leverage and degens in there helping, obviously. But this millions and millions of people in developing markets onboarding onto Lightning, and somewhat kind of becoming familiar with Bitcoin as a medium of exchange and even potentially a unit of account, earning Bitcoins, earning Sats. That's what why this thing is going to win is not because regardless of what the U.S. does, regardless of what China does, like people are utilizing this instrument, this engineering solution. And I think you guys have a show on it every day. I talk about this every day. It's very misunderstood. It takes a lot longer than I thought it was going to take. The education and a lot of people don't dive in and do 200 hours of reading and learning on something once they become a little fascinated or intrigued by it. The Bitcoiners are the most conviction that are all screaming at each other and have laser eyes. Like, yeah, we've done that due diligence. The conviction is a natural response, but most people haven't. Most people are like, listen, speculative internet money is cool. The things you're telling me are cool. Energy markets and inflation and all this Yahoo stuff that you don't. I don't really know. I'm a dentist. I don't really care about any of this stuff. I don't really want to invest my money. I just want to save, right? And you're trying to like explain something to this person that has never even stepped inside the world you're trying to explain. So it takes time. It's going to take, I think, a little bit longer than we think. But there's certainly a case where the gradually then suddenly aspect is at play here. The question is like, where are we on that inflection point? I don't know, but I certainly want to be along for the ride and will be. So we will see.
Yeah, man, I'm being in the trenches with you. Now, you mentioned something, and it's honestly something that bothered me, right? Which is specifically countries that have financial privilege. They have countries that have relatively stable fiat currencies. People are just not incentivized. You said it, like you're a dentist, you just don't care. But what's really fascinating is when you speak to an Argentine, you speak to a Venezuelan, and you tell them about Bitcoin. It's like, where do I sign up? This sounds like a phenomenal idea. This sounds like a great idea. So, and I agree. And when Jeff Booth came on the show, I was like, hey, like aren't you worried that this is happening? And his response is fascinating, Dylan. He said the people that are closest to the monopoly are the ones that, are going to be the latest to wake up. Like they're not incentivized to wake up. They benefit from this system.
Yep. Yeah, and that's perfectly fine. I there was a certain there was like a part of me in the kind of the orange pill rabbit hole journey where I was like, begging, not like begging and pleading with others to explain this to them, to like regardless of who it was, right? Like friends, family, investors that I respected, for like, and I reached a certain point where I'm still willing, obviously, to talk through the case, help people understand my perspective or other people's views on this thing and why they would buy it or hold it or do X, Y, Z with it. But if you don't care, if you think Bitcoin's a scam at this point, like that's fine, right? Like yeah, exactly right. Bitcoin is a scam. You're finally right. This time it's crashing to zero. And the exchange rate volatility is something that like I'm completely fine. I've signed up for this. I've allocated accordingly. You should too. And if you think that rate allocation is zero, that's on you. I'm fine with that. I can accept that, and you should accept the consequences of that, because there's there's a tail probability here, and most Bitcoiners think that it's the base case and not a tail scenario at all, where this thing becomes a globally dominant reserve asset and potential unit of account for baseline value around the world. There's a tail risk of that. If you assign that probability zero, that's fine. I don't think it's zero, and I think it's probably higher than most would like to think. And so, accordingly, I want to own some, right? Like, and describing this as like 100% sure thing, hyper Bitcoinization. I think that's where you lose some people, at least to come in, right? Not to come in. I'm not trying to recruit you. I don't care if you buy Bitcoin or not, but like, if you want to understand the thing, I think pitching it as like a sure bet it's going to, be worth $900 trillion is like probably the wrong approach, right? It's like, I think it's, being somewhat bullish, but, reasonable, objective, moderate, in the pitch is a little bit more effective. And that's a bear market phenomenon. Maybe it's like, we should be shilling just relentless amounts of hopium, to get people to scoop cheap sats. But like, I've taken with my approach a little bit, I guess, over the last few years in regards to like the response to critics.
Yeah, it's definitely very frustrating for sure. And I do want to go down that hopium route. I want to take advantage of the last couple minutes on the podcast. And you were talking about this potentially being adopted on a worldwide level. And there's this great piece from Kathy Wood's ARC, and she's talking about the bear case, the bear case, the base case, and the bull case. The bull case 1.48 million, base case 682,000, bear case 258,000. These numbers just don't come from anywhere. She's making the case that Bitcoin would take a percentage of digital money, institutional investment, seizure-resistant assets, economic settlement network, emerging market currency, nation-state treasury, remittance asset, corporate treasury, and of course, the bear and the bull, the percentages vary. But what I find the most interesting is the digital gold one. And the bear case would be 20%, which is pretty high percentage-wise, and the bull one would be 50%. So I don't know if you had a chance to look at this, Dylan, but you were mentioning about Bitcoin potentially being adopted on a worldwide level, and it's this is a good little graphic to pull up to speak about that. So I don't know, man. What do you think of this? Is this pure hopium straight into our veins?
Yeah, I think that the thing that I've learned, is that to a certain extent, price targets, fair value estimations, etc., are great. Happy to hear those and potentially some baseline scenarios. But assigning a price and a timeline is, for something this volatile, this nascent, to the upside, and volatile to the upside and downside, right? Like in 2015, who could have imagined in their right mind that Bitcoin was going to touch 20,000? It was just inconceivable. And subsequently, right, if you told someone in January of 2018, right, we're dipped from 20K to 15K, you're like, yeah, in 2023, Bitcoin's going to be $20,000. They'd be like, what went wrong, right? Like, and so the wild swing of emotions is certainly like something. But I'm sorry, I went off on a tangent and forgot the purpose of your
No,
question.
it's all good. It's all good. You're being cautious, and I think you're totally
Oh yeah,
taking
yeah,
the right. You're totally taking the right approach. And you're saying, because I completely agree. I think that price targets into the future, it's pure hopium. No one has any idea what they're talking about. I just think
yeah,
it's interesting. Maybe not so much from the price anticipation aspect, like if we put that aside, but more so from the percentage of the penetration percentage rate. And I think that's what's really interesting to me, right? Specifically when it comes to, for example, nation state treasury, 0, 1%, and 5% are the numbers she laid out. Digital gold, 20, 40, 50%. Institutional investment, 1, 2.5, 6.5%. So I guess the question, a more responsible question for you, Dylan, would be, are those numbers even conceivable? Did you imagine a future where Bitcoin is a well respected, because it has to be in order to get to those numbers, a well respected institutional investment? Do you see that? Because right now we live kind of in this in this moment in time where Michael Saylor, Naim Bukele, they don't exactly look like their moves were intelligent. Of course, as Bitcoiners, we're biased, and we know they're going to be vindicated eventually as number go up technology does its thing. But I don't know, man. What's your take on that?
yeah. I mean, I think it's a global capital flight sponge, and capital flight not in a political dissident way, but potentially in a political dissident way, but in a systematic way. It's like if you think about all foreign exchange, if you think about dollars against Japanese yen, it's a little, forex is a little different because like they both have moving exchange rates. So there's also kind of an exchange rate interest rate carry mechanism in those relative things. But essentially, right, like if you think about the dollar, if you think about when you're talking about, global debt to GDP dynamics, why debt to GDP even matters, and why do we see like these global wars break out at these high inflection points of global debt to GDP, and then wars come and like somehow reset the table? Like, why does that stuff happen in monetary systems? Why do monetary resets happen at these global inflection points? And it's because the debt systems are too unsustainable, right? It's just they reach a point where they can't be serviced, so something has to be done to revalue the real burdens. And we're in this middle of this revaluation with this kind of dose of inflation. They mapped this out in 2014, 15. The IMF came out. They wrote a paper. They're like, how do we get this debt levels down? They're like, oh, well, a steady dose of inflation. And it's a wealth transfer from the creditors. Who are the creditors? People that buy the long-term debt, right? So this is the game that's being played. And Bitcoin is just sponge as just this exit opt-out vehicle. Whether it's like, you're DCAing on Swan or Strike or River, or you're in an emerging market and you're literally just, selling freaking, you're selling food on the side of the road to support your family, and you're storing it in Blue Wallet in an open source manner. Like this is all happening, and it's all at a relative game. So Bitcoin, if like the funny thing is like a 40% compound annual growth rate is like the bear case, right? Like slash that in half, right? Like slash their bear case arc by 75% and have it be 25% the size of that bear case prediction. What was the bear case like? A couple 100,000? Like even if it was like oh, you estimate Bitcoin at the worst case, and then lower that by a factor of 4 even. Oh, the worst case is still like a 10-15% CAGR. Like, oh, okay. So I just, all I need to do is just like own a little bit of it, protect my tail risk here, which is like the system I know and I'm comfortable with, and the world I know from an economic standpoint. Even if you don't know economics, I just have a 401k or pension or something that I'm promised 20 years down the line. But you should own a little bit of Bitcoin in case that those entitlements you think you have are a big fat zero. Like Nico, my Social Security is taken every week from part of my
Mhm.
income, and I just imagine the money just getting burnt.
Yep.
I know I'm never going to see any of it. I know that. I mean, I'm not necessarily at peace with that, but I understand that's a reality of my situation. It's stolen, it's burned, I'm never going to see it. it's supposedly going to the roads, but it's really being funneled through Ukraine in a money laundering operation. Like, I'm at peace with that. I understand that. I will say that, and maybe that makes me, this rogue political political person. But like, I don't think that's a radical view at all. So my response to that is like, all right, I'm going to own one of the only things in the world that I think I can actually own. And I'm really comfortable as a mathematics person. Like, I approach Bitcoin from a math and finance lens first, and all the technological stuff I dug into and came to understand afterwards. But as a math person, like, I'm very, very comfortable after, reading some elliptic curve cryptography and reading smart people's opinions on it and learning about encryption and learning about, the halving and the difficulty adjustment and all these things and how this thing works, and learning a little bit about software and what running a node means and what mining means, and being like, okay, wait, so this is probably the only place in the world where like I can, hold what I own and where it can't be corrupted. Like that, there's really nothing else. I can defend gold with my gun, right? Like that's good. But that's not good if I want to hop around the world really easily, right? So like Bitcoin is just like, for me, I'm a privileged Westerner, Nico. Like, I have a brokerage account. I can short bonds if I want to, or long NASDAQ stock. But like, it's like the person in Argentina can't buy NASDAQ. They can't get dollars even. They can't get dollars at the real rate. Like, what can they do? And there's, I think there's a singularity here with like Bitcoin as, one of the more important ideas of our time. The wild bullish price targets are fun. And I've honestly been a proponent and champion of some of those crazy, ludicrous targets in the past, and I still am. But I think that's the price, despite being an analyst that posts a lot about markets and financial stuff and price. I think that's like one of the probably lesser interesting things, is like projecting out like, how many sats do I own, and like, what will this price be in the future? 10 million. Oh, I'm gonna be rich and I'm gonna buy a jet ski and a villa, versus like, okay, like, this is probably one of the most important ideas of our time. I should own some. I should be able to eloquently describe the bull case of it. I should be able to, regardless of who's my listener, because there's always an angle where someone could probably understand it if they're not completely like closed-minded and have a ton of cognitive dissonance. So I think that's the important thing. I think the ARC framework is interesting. They've certainly been battered, ARC, as along with Bitcoin stuff, but they have some really smart minds there. So I respect what they do.
And I think you said it perfectly, Dylan. Came for the money, stayed for the revolution. And I think that's what we're all living through nowadays. Anyways, Dylan LeClair, it's been a pleasure, honor like always. Thank you so much for coming on Simply Bitcoin IRL. And I mean, this is an obvious question, but I do it with every guest. What are you working on nowadays, and where can people find you online?
Yeah, I am doing a few different things. I am with Bitcoin Magazine, BTC Inc., writing the newsletter Bitcoin Magazine Pro. You can find that at bitcoinmagazinepro.com. We're just putting together Substack releases covering more of the finance aspect of it. Also kind of doing my own thing with 21st Paradigms. You can find me at Dylan LeClair .info, or just my Twitter at Dylan LeClair _ I also have been trying out Noster. I don't know if it's the best place to find me there, but it's a pretty exciting, that app. And Twitter, I am bullish on Twitter. I like Twitter. I love Twitter. Spent way too much time on there for the past few years, but a little bit pessimistic about its staying power. So we'll see what it goes. But I mean, Nico, I really appreciate you guys having me on. It's been fun to rip, and hope the listeners enjoyed it a bit.
Thanks, Dylan. Appreciate you coming on. Guys, that was another episode of Simply Bitcoin IRL. If you enjoyed it, make sure to smash that like button, and we will see you tomorrow back for the live show. But if you want more Bitcoin content, head over to the Swan Bitcoin channel. They just dropped a new podcast with Dr. Jeff Ross and James Lavish. So definitely check that out. Love you all, and we'll see you tomorrow.